Hey guys, what's going on, everybody? It's Matt Marinoff, Real Estate Recovery Group, and I have a very special guest today, Christopher Allessio from Freedom Mortgage. Chris is not only a mortgage professional, he's also a homeowner. He's also a landlord. So Chris has a tremendous pulse on what's going on in the mortgage industry right now. So settle in for the next 60 cruciating, what am I trying to say?
No clue. I don't know, but you pronounced my last name wrong too, Matt. I'm a little disappointed in
how do I pronounce it?
Allessio.
And what did I say?
I don't know. It was like Alessandro or something like that.
Oh, it's Christopher Alessio.
Yeah, that's right.
Yeah. I'll have to go back and edit that later on. You know,
That's all good.
It's been a rough couple of weeks. I'm not gonna lie, bro.
I'm sure you're busy. I'm sure you're very busy.
We're busy right now only because of the unknown and people don't know, which is going to be really scary because there's a lot of horrible things going on. But today isn't about me. It's not about Real Estate Recovery Group. It's about letting people know about yourself, your company, Freedom Mortgage, and to maybe put a kibosh on some of the rumors or what's going on out there as far as different programs. The guidelines, we understand, have changed. I'm getting conflicting reports on that as far as credit score, criteria, down payment information. So everybody, this is Christopher Alessio. I'm telling you, bro, it's been bad. So Chris, tell everybody who you are, what you represent in the mortgage community.
How's it going, everyone? My name is Chris Allessio. I'm with Freedom Mortgage. I'm a loan officer there. I'm also a full-time real estate investor. So I'm buying and selling a lot of properties in and outside of the lending part of the business. I'm also a landlord, like you mentioned. As far as from Freedom Mortgage perspective, what I do is I assist investors, homeowners, new. Sorry about that. I was getting a call. I had to mute. Can you see me still?
We can see you and we can hear you loud and clear, Chris.
What's going on here? I think we lost.
We can hear you, Christopher.
I think we're back.
We can hear you.
I can't hear you, Matt. Can you hear me?
We can hear. Yep, we can hear you. Can you hear me? No, this is going to be horrible. Guys, when we do lives, it's better off not doing it on your cell phone. You're better off doing it from a tablet, Mac, or a desktop for these obvious reasons. Chris will be back. He's going to log back in, obviously, and we'll get him back on. So here he is. He's coming back. Here we go.
Apologies, I'm back. Can
you hear me? Yeah, we can hear you. So, Chris, going forward, if you ever do any of these, try not to do it on your cell phone. Try to do it on a tablet, Mac, or a desktop for those reasons where you're going to get intrusions with phone calls. But go ahead.
Got it. So essentially, yes. Let's just jump right into it. Right now, we're experiencing a unique time in the industry. I would definitely say that.
There we go again. So
most of what is going on has never been seen or witnessed by many people that have been in the real estate world for a very long time. So a lot of this is being kind of figured out on the fly. But I will say, though, depending on the mortgage lender that anybody's working with, they've already implemented some really good, really good measures to make sure that deals are still closing and that you're protected, the homeowner's protected, the buyer's protected, sellers are protected throughout the whole process. So yes, guidelines are changing. They're changing daily. There is, and a lot of it depends on the lender itself. Can you still hear me, Matt?
I can hear you fine, Chris.
I don't know why I can't hear you. Same problem.
All right. Well, you're gonna have to log.
Let me try to do this on the. Take this out.
Yep. All right, guys. So Chris is obviously he's having some technical difficulty, and I've obviously mutilated his name. It's been a rough couple of weeks. What's
Hold
going
on a
on
second. I'm going to do it on the desktop.
Coming on the desktop, so that could be very helpful for us. Apologize for this, guys.
Hold on a second, Matt. I'm doing this on the desktop.
All right. Can everybody hear me? I want to make sure everybody can hear me. I know we have a couple of people in here right now. I have a couple of different rooms going at once. So the numbers might be smeared a little bit as far as how many people I know are actually on here or not. But as I said, Chris is going to be switching over. This is really important you guys tune into this because we're getting a lot of conflicting reports right now with various different people that are lenders in the institution, in the community. And it seems that everybody has different programs. So because there's different programs out there, same thing. Whether somebody is able to perform as a lender right now, whether they're a hard money lender, or whether there's somebody else that might be in the industry as far as regular. Um, let's see if we can bring him in. Can't bring him in, guys. Looks like this one's going to be a dud, ladies and gentlemen. Hopefully, he can log back in now. Now that we kicked him out of the studio, hopefully he'll be able to log back in again. Hey, these live streams, I tell you. In any event, so the reason why I picked Chris to come on here and talk is because I've known Chris now for quite some time. We're throwing business back and forth with each other. People that are coming to me that trying to get mortgages for distressed real estate for whatever reason, the lenders that they're going to, they can't get for whatever reason approved for mortgages. So I'm not a mortgage guy by trade, although I did work with mortgage companies in the past. I was never in the mortgage capacity where I was writing mortgages. I was either taking applications and or working in the post-closing or closing department. It's actually how I got my start with the for sale by owner stuff that I was doing in the mortgage industry. So it was amazing, to see what happened when I got in 2005 and how crazy business was. I mean, it was insane to 2007, 2008, where things just went ballistic. And there's more people. I saw there's a lot more first-time home buyers purchasing properties versus people upgrading from the regular houses where I was. As far as other individuals in this industry, I know everybody's got a story about how they got into it when they were a mortgage representative. Um, Hopefully, if we can get Chris back on, then we'll be able to get his take on what's going on right now regarding COVID-19 and the coronavirus. Um, on the short sale side of things right now, we're still closing deals. I mean, we're still getting approval letters from the banks. Title companies are a little bit slower, which is okay. I mean, guys, everybody's doing their part right now, which is great. We're having, I would say, anywhere between 3 or 4 days of a lapse getting title back. For us, when we do short sales, we're getting the title report from the beginning because we want to know what we're dealing with up front as far as the information. So it's important, obviously, that we have everything in. Let me just see here. Log back in from desktop, please. Make sure phone is not connected from before. Let's send them another invite, guys. I really apologize for this. Go back in again. All right, he's logging back in now from his desktop. Hopefully, we'll get him back in. Well, we're going to give Chris a couple minutes to see if we can get back in. In any event, like I said, the purpose of this call, this live, was to let people know what's going on the mortgage side. I don't write mortgages, so I'm not going to be able to pretend like some of these people, some of these characters on Facebook right now that are offering solutions, saying that they can do certain things and they can't. Look, we all can't be Superman in what's going on right now in the mortgage community. People are buying properties right now. It's amazing because, you know, the technology that we have out there right now, people really could purchase properties without really seeing them through the internet. And that's we're seeing something that probably we've never seen before with going on. So it's pretty amazing stuff. And I think we got him back. Chris?
Yeah, I'm back.
Beautiful.
Can you hear me now?
Guys, we got Chris Allessio back. Allessio couldn't make it. We've got Allessio. So we got Chris Allessio from Freedom Mortgage instead of Chris Allessio. Chris Allessio, thank you so much for making it back on the live. And I've got some caffeine into me, so I'm not going to mistake anybody's name for the rest of the call.
There you go.
Chris, before we got viciously cut off before, I believe it was a terrorist attack. No, I'm kidding. It was definitely some type of virus. Chris, tell people what's going on in the mortgage community right now. Let's talk about a couple of different things. Let's talk about first-time home buyers. Somebody who's purchasing a property before coronavirus, what was it like? And now with the coronavirus, what is it looking like?
Well, purchasing before the coronavirus was pretty straightforward. You know, we qualify a borrower, we make sure that that they have their income, their assets, their credit score, everything is in good line. Now there's been some major curveballs. Are people still working? What are their hours been reduced? People are still working, maybe have lost all their overtime. Are they essential? Are they non-essential workers? These are all questions that a lot of people are asking, which are potentially delaying closings or potentially canceling closings altogether if a borrower has lost their job. So it's been pretty crazy from that perspective. But I will say, though, we are working through each one of those cases individually. So that's really all the best you can do is work through individually on each case and just make sure that, if a borrower is still working, we're getting a verification of employment up until 5 days prior to them closing, which has been a new guideline change. But we're working through all these steps. A lot of deals in New York are just on temporary hold. Title companies are not working there. A lot of attorneys are not working. A lot of businesses is considered non-essential, so it's really tough from that perspective. My heart goes out to a lot of those homeowners that are or soon to be homeowners that had to put their transactions on hold, but they're going to close. It's just that they're going to get pushed out. So we're just reaching out to all parties. The seller, hopefully it's an amicable transaction where the seller can wait and just be a little bit more patient for the deal to go through. And then once everybody's back up and running, that the deal will fund.
So, Chris, we're talking about first-time home buyers right now. We're talking about people that are, purchasing their first either stepping stone as a property or their forever home. Um, so, when you were offline, I was talking a little bit about the title companies. As far as title companies are concerned, we're getting title done. It's usually taking about 3 or 4 days extra. We're dealing with, either skeleton crews, or we're dealing with people that are actually working outside, in their homes, and they're making it seem like, they're calling in, hey, thank you for calling, ABC company. Please dial the extension. It's getting routing to them, which I think is great with technology. What are you seeing on your side as far as title companies and people that are, maybe not utilizing your attorneys or your title companies, outside sources that you've never worked with before? Do they have a defeatist attitude, or are they excited and exhilarated to get the transactions done?
No, they're excited to get the transaction done. I think it really comes down to state level and then also county level. In Jersey, it's been the title companies and the ones that I work with and I have longstanding relationships with are fully working, and sometimes skeleton crew, but they're getting their searches back sometimes maybe just a couple of days later. But then on county level, like in Essex County, there's been some towns where it's been some cases where it's been a little challenging. Passaic County's been a little challenging, but we're getting them back. We're definitely getting them back, and we're closing transactions. So Jersey's actually been pretty good. New York's been a little bit more challenging, but New York pretty much shut down a lot of attorneys and bank attorneys have been on hard hold, or if they are working, they're on skeleton crews. So that's been a little bit more challenging. But New Jersey, I really haven't had any issues whatsoever, and even in New York, we're working through those issues.
Well, that's obviously amazing stuff. So obviously, concerned right now, people are up in the air about interest rates. Where are we? What's going on with interest rates right now?
Interest rates, depending on a borrower's credit profile, credit score, if they're in a purchase, or whether they're, how much they're putting down, what the loan amount is, what type of product they're getting into, the rates are still, very good into the threes. Where rates were maybe about a month ago, they were a little bit lower than that, but they've seemed to creep back up. There's a lot of volatility in the market, which definitely, was a little all over the place. We were seeing a couple of weeks ago rates going, full 1 point swings on any given day, which was wild. It was just a wild time. You see 4 or 5 different price adjustments during one business day. But that's sort of leveled off, and things are kind of calmed down since then. So we're seeing rates still about in the threes. Investment properties, you're seeing a bump up on that. So any investor that's coming out, you need to do a refi, cash out refi, regular rate and term refinance, a new purchase. You're always going to, traditionally, those rates have always been about a point higher than where the primary owner occupied rates are, but those are still in the about a point, maybe even sometimes a little bit more than a point, more than where primary is.
Okay. So we covered first-time home buyers. We touched on, investment properties, people for refinance. We're going to come back to investment properties in a second. What about people that are, basically trying to buy up, selling their property and purchasing other properties right now? What do you see as far as, is there a slowdown? Are people still able to get any type of bridge loans to get them from point A to point B if they have to? Are deals falling apart because maybe somebody else's transaction fell apart, almost like a domino effect? Are you seeing any of that?
The majority of my pipeline, no. I have seen some and heard some deals fall apart, mainly because workers are not able to work right now. There's some borrowers that are, for instance, I have a couple borrowers that are union borrowers, union workers, that their jobs have just temporarily shut down. So once everything gets lifted and they go back to work, we've basically, put that deal on a hold right now, and the sellers are being amicable. So amicable. So those deals are not moving forward, and that will affect the purchase and sale back to back, transaction. So that's possible that you're going to experience that. A lot of other people are still working from home. It's business as usual, just working out of their house. So those deals are still moving through. I think from, it's, again, this goes back to my original point, is that it's on a case by case basis. You can't really broad stroke this, or, and say all deals are going to be the same, because no two deals are ever the same in any transaction. So you really got to figure out what exactly is going on in the deal, find out the details. What type of work does the borrower do? What type of work does the seller do? Are they able to close? Are the attorneys closing? Are the title companies closing? And, find out all the facts, and then you can really make the transaction work.
All right. So I guess, my concern right now is, we're hearing a lot of stuff where people are getting laid off. They're putting these, different packages in place for business owners. I myself actually applied for it. I don't want to lay anybody off. I'd like to try to make it as easy as possible for the people that work for my company. And I know there's a lot of other companies out there too that are trying to, keep stability. Correct me if I'm wrong, but when you guys call in for a verification of employment, are you guys calling in to verify? You said 5 days prior to closing, you're verifying. Are you also verifying whether or not they actually will have a job in the next 30, 60 days? Or do you not have to do that?
To be honest, that's a great question. I don't think that's part of the conversation at this particular moment. Right now, the guideline is just saying we're checking employment, and we're checking, has there been change in pay?
Mm-hmm. Got you. So, what happens in a situation, and maybe you can answer this, maybe you can't. What happens in a situation where somebody's going to the closing table and for whatever reason, they have their job, everything's intact, getting ready. And again, correct me if I'm wrong, but you escrow mortgage payment, right? Or at least 1 or 2 payments. So let's say somebody's closing May 1st. When is their next payment usually due? Is it June or July?
It depends on the date in the transaction. On a refinance, it could be, you could end up skipping 2 months, and on a purchase, it could just end up skipping 1 month. It really depends on the day of the month that the transaction falls, because we're going to collect the amount of interest that's left, that's prorated in the month, and then the following month. So it could be a month and a half that someone's skipping on a purchase. Like if it falls in the middle of the month, then you're not going to pay. So if it falls on, let's say, April 15th, you're not going to pay May because it's already been collected. And then your first payment to the bank would be June. That's a very good possibility. And then on a refinance, you could potentially skip up to 2 full months. So really, you got to know exactly when the day of the month is closing. Then escrows would be collected for either prepaid interest and title taxes and insurance.
Primarily, what would be a good time for somebody to close to take advantage of being able to skip a month or two? What's the rule of thumb on that?
On a refinance, I think that's one of the on a refinance, that's a great option, as opposed to, if you're trying to give yourself a 2-month breathing room, especially in a situation like this, and you do have a job and you're able to refinance, and it makes sense for you to refinance. That's a really, really good strategy. So, let's say if you're going to close the first week of the month, we're in the first week of the month right now, you would be getting your payoff from your current mortgage servicer. Mm-hmm. That current mortgage servicer would include this month's payoff in that payoff. So right now, you would close today, you would have and you didn't make the April payment, it would be included in your payoff. So you would essentially not have to come out of pocket for the April payment. You would not have to come out of pocket for the May payment. And then your first payment to the bank would be June 1st. And that gives you a 2-month breathing room. Additionally, getting your escrow refund check back from your current servicer. That's a fantastic strategy.
So Chris, let's take 2 questions here, if that's okay.
Yeah, go for it.
So unfortunately, and I don't know why this is the 3rd day in a row this has happened to me. It doesn't actually show where the person's name is, but the person said their deal had fell apart. If you can, please just type your name in so we know who you are. I apologize for that. And we'll come back to you. But if you could definitely do that, that would be great. The other question that we have here is, what programs do you have for bridge loans?
All right, so bridge loans is needing capital to your down payment.
I'm assuming, based on the fact that we talked about getting from point A to point B, the bridge loan, maybe like to carry them over to the next mortgage, maybe waiting for the other person to purchase their property.
Well, let's be a little bit more specific. So let's have the borrower or the potential user ask that question.
Okay,
You can
so
specify.
yeah, so whoever actually answers that question, if you could just type your name in so we know who you are exactly. And again, I do apologize. I have to reach out to a StreamYard and find out why that stuff isn't pulling together. Oh, there you go. Dante. Out to a StreamYard and find out why that's. So that's the person right there, Chris.
Okay,
Why
sounds
did
good.
apart?
So what can Dante, can you explain a little bit why your deal fell apart? Let's just talk about the specifics.
Oh. Well, while we wait for Dante, somebody else had a message. It wasn't regarding bridge loans. They were talking about fix and flip loans. What kind of
totally different? Yeah. Okay. So that sounds like, well, depending on who your lender was, if your lender was a non-QM or potentially hard money lender, those products, I should say, not all hard money is out of the space right now. Actually, there are still a few companies that are very healthy and still lending, although they just tightened up the guidelines a little bit. But most non-QM product, meaning like, no verification of income, you're just using bank statement only, stuff like that. That type of product is gone completely. So those lenders have just put on a temporary hard hold. Some are just completely exited the space entirely. Some may come back, some may not come back, but those type of products have just been pretty much put on hard hold. So if that's the type of product you were going for that on the loan, that's very, very possible why your deal just fell apart at the 11th hour.
Interesting. Chris, what do you see?
I have about 6 files right now.
Yeah.
That buyers were going to the table and they actually were denied, or I should say the lender just chose not to fund the transaction. So I got calls from other referral partners asking me to put the deal back together. Freedom Mortgage is still lending. We are still very healthy and we are lending with our programs. So if a deal makes sense, obviously, credit scores have increased a little bit. A minimum on FHA needs to be 640 now. Previously, it was a little bit lower than that. But things like that, we are still lending as long as you can fit into the guidelines. We are still, fully transactional.
All right, so I put pulling, but it's putting. So other lenders are putting files on hold right now. But so are you getting calls from other people that are saying, "Hey, can't get my file done. Can you help?"
Yeah, I got 6 right now.
So you got 6 files right now from other people that couldn't get the transaction done. Can you give us an example? Out of the 6 loans, how many of those would you consider might be like a 2 or 3K loan, or fix and flip?
None of them are a 2 or 3K or a fix and flip, but we do those. Those are our home style product on the conventional version of the 2 or 3K. The 2 or 3K itself, we're one of the nation's largest renovation lenders. We've been doing it for a long time. We service those loans. Not a lot of people do that. Actually, they just may originate them and sell them off. But we actually originate and service those as well. So we've been doing it for a long time. It's a niche product for me as well. But 2 or 3K, none of these deals are 2 or 3Ks. If anybody has issues with the 2 or 3Ks not closing, please feel free to reach out. I'd be happy to take a look at your deal, figure out why it's not closing, what exactly happened in the transaction, and see if we can pick up the pieces and help you out. As far as some of the other deals, like if it's a fix and flip where, it was a non-QM product, there probably is a reason why, you're not closing. I mean, maybe you weren't bringing enough to the table. Maybe the lender might have just disappeared completely. They're not doing those type of funding anymore. So you may have to go a full doc route. And that's just kind of is what it is. That's the climate that we're experiencing right now.
Chris, sounds like you're very busy, which is good, in this time frame. I know that there's a ton of people out there that are freaking out. I really think that this is going to be a case of the strong and the weak, where the food source itself is not plentiful right now, and I don't want to say the hustlers, but I think the people that are true innovators in the industry, that are entrepreneurs, that are really going to take full advantage of what they need to do as far as getting through these tough times. Now, the lender simply doesn't want to lend during this time. All right, somebody just put this up. The lender simply doesn't want to lend during this time. Well, can you please just say your name? I apologize. I don't know why my account is not showing who it is. If you have a question or a concern, obviously I can hook you up with Chris, and Chris can help you out. Nobody should have to go through a situation where just because somebody doesn't offer a product. Chris, what would you say to somebody right now that, you got those 6 different loans from other mortgage companies? You work for Freedom Mortgage. Obviously, there's a lot of people who know Freedom Mortgage. But there's a lot of people that don't know Freedom Mortgage. What would you say is the difference between where you're sitting right now versus other mortgage companies that are out there as far as products, old and new product launches or launch that might be coming up on horizon, and helping people that refi, purchase, fix and flip? What is it that's different about Freedom than anybody else?
I think one of the largest and biggest differentiating factors is the fact that we are a direct lender, that we're not a broker. We are a direct lender lending our own money with a in-house processing and underwriting team. That allows us to control the transaction from A to Z.
Chris, Chris, back up, because some people don't know what that means. Explain the difference between direct lenders and brokers.
A broker will take an application, and I have no qualms against brokers. They're, I know some, they're good people. It's just a different facet of the business. They'll take an application, and what they'll do is they'll shop it at a couple different, banks to see whoever gives them the best terms and whoever wants to take the deal. That broker is completely tied to that lender, and they have to comply with those lending, that lender and their underwriter and their guidelines. Whereas a direct lender, we are the originator, and we are the one lending on the transaction. So we have our own underwriters and processors that are working on the file. So we are able to control the entire transaction, whereas a broker is exactly that. They broker the deal through another institution, and that other institution is really the decision maker on the file. So they're the middleman or middlewoman who has to they're upheld by whatever guidelines the bank that's going to lend on the transaction is going to offer. There's really no way to maneuver through that.
I just connected you and Dante on private messenger, just so you know.
All right, cool.
So you guys could talk offline about the scenario. Okay, so we covered a couple of different things. First-time home buyer. We talked about refinance. We started to scratch the surface with investors. Chris, what the F is going on with investors right now? And is it true what they're talking about as far as reserves and what they have to keep on hand to actually qualify for these loans now?
Yeah, that's correct. You are hearing, I don't know everything you're hearing, so I can't really say it's correct or not, but I will say as far as reserves go, that is true. Reserves are going to be, you're going to need a self-employed or an investor who is carrying multiple properties trying to do a transaction. Each one of those properties will probably require up to 12 months reserves to
normally.
6 months. It's typically whatever the findings say, but on average, it's about 6 months.
It used to be 6 months. Now it's 12 months. All right. Well, I'm frightened because what if somebody doesn't have the 12 months and the 6 months? Can you give us an example of how people are not going to be able to qualify for these loans? Can they add a co-borrower to these loans? What can they do to, I don't want to say erase the 12 months, but what can they do to try to be creative if they don't have the 12 months? Or is that an absolute, you have to have it?
You have to, it's different for each type of borrower, whether you're self-employed or whether you're a W-2 or whether your income is derived from, how your income is derived. You have to take that on a case-by-case basis. Across the board, pretty much the 12 months is going to be used. That's a very good baseline. I always tell the investors that I work with is, keep your reserves, stay healthy, because you never know when a storm is going to come. And now we're experiencing a storm. So but I would definitely say to any investor out there that has multiple properties, that's looking to do either a new purchase or a refinance out of hard money or out of a high interest loan into something long-term, connect with me offline and let's talk about the situation. No two deals are alike. You gotta look at each transaction differently, and everybody reports their income a little bit differently. So there is always a creative way. You just got to look at the deal and look at the file and figure out how we can go about it. There's really no one broad stroke that I can tell you. So the 12-month reserve may actually not be, if the income is good enough, you may be able to reduce the income by 25% and not need the reserve. So there's other ways around it.
Chris, are you cool with me putting up your email?
Yeah, absolutely.
So I'm gonna do
the card, right?
The Freedom Mortgage one.
Yeah, definitely. Put the Freedom Mortgage up.
Now, do you want me to put a phone number? What number would you want me to put for you?
They can put it up my email, and then someone connect to me on email, and then we'll jump on a call if need be.
Okay. So basically, guys, what I'm going to do right now is I'm going to put Chris's email on here. So if you're bashful right now, somebody messaged me and said, I'm nervous, I don't want to answer the question online. That's fine. So I'll send that person's information to you directly, Chris. But if anybody has any questions or concerns, I'm going to make it super easy for you guys, where you can actually reach out to Chris directly via his email address, because some people are going to ask questions. They might be embarrassed. And this call is not to embarrass anybody. This call is obviously to educate people and make them understand, we're all going through hard times right now. I am physically going through a hard time right now. We are getting closings that are getting stacked and pushed off because people are afraid to come out. So I don't want anybody to feel like, they're being ostracized by asking questions on here. So I'm asking Chris, and he said 100%. I could put his email up, so I'm going to put his email up. Chris, let's talk about the forbearance versus a refi.
What do you mean versus a refi? You mean like?
Somebody just messaged me and said, can they ask a question? And the answer is yes, you can ask a question. Yeah, ask your question. Yeah, so forbearance versus a refi. What if, and I want everybody to stay with me on this. If you do a forbearance, and I'm going to show you guys what a piece of paper looks like for a forbearance, because I asked somebody and then I printed it off. They said to me, 100%, my bank says they're going to do a deferment. I said, you sure it's a deferment? They said, yeah, it's a deferment. They're going to send it to me in writing, okay? I don't know if you can see this or not. Can you see it? First payment, second payment, and then there's a balloon payment, okay? Guys, that's not a deferment payment. That's a forbearance. Okay, that's
That's correct.
April, May, and June. It's 3 months. So they're saying, correct me if I'm wrong, Chris, that third payment, that's a balloon payment. That payment's owed, correct?
That's correct. Yeah, that's deferment.
Okay. So this is a payment that's owed, okay? This is not a deferment. This is a
Excuse
forbearance.
me, that's forbearance. That's forbearance, excuse me.
That's okay. That's okay. This is a forbearance. But you see how people get the words mixed up? Even like, I couldn't say Chris's last name before. So you talk about balloon payment. This is what a forbearance looks like, guys. So when somebody says, I'm getting a deferment payment, that is not a deferment payment. That is what it's going to look like when you get it in the mail and it's clear as day. It's saying it's a balloon payment. Right now, I have not seen one deferment payment come in at all across my desk, anything that would have popped up. And I want to make it very clear. You got to communicate with your bank.
100%.
The reason why I ask is the difference between the forbearance and the refi. In a forbearance agreement, I want to make this very clear, okay? Because people look at me as a leader in this industry. First payment, second payment, third payment, okay? Third payment is your balloon payment, okay? You don't have to make payments in April and May, right? But you are allowed to make partial payments, guys. So let's say you get your deferment, your stimulus check, and in June you're going back to work, but you don't want to be choked with that massive payment, right? You can make a partial payment during your deferment time. I'm sorry. I said myself. During the forbearance period. During the forbearance period, you can make a payment. It is absolutely allowed. Chris, I don't know if you know that or not, or if you agree with me, or if you think, I'm off my rocker. But that is something that you can do. And the only reason why I say that is because what happens during that forbearance period, you make those payments or make a partial payment, that payment that is, essentially, $7,000, by the time it gets to June, maybe you're only making a $3,000 payment. Don't choke yourself. Don't panic. But if you can make your mortgage payment, you got to make it. Because, guys, this is going to be a shit show. So, Chris, the point I was trying to make is, let's say somebody has an interest rate right now. And again, I don't know these things. You're going to know. You're the expert. And these are scenarios that people could reach out to. Maybe I might, pique somebody's curiosity. And Chris, if it's okay for them to reach out to you, at least to ask you your opinion. If their interest rates in the 5s and interest rates right now are in the 3s, does it make sense to refi, whether it's a 15 or a 30, or if they want, maybe take their 15 and go into a 30, and maybe be able to skip, 2 payments, so the things would be a little bit different for them?
I have a borrower right now that called their server. First and foremost, just to be very clear about this, everybody's got a different servicer on their mortgage. The borrower has to call the servicer, find out all their options, and get it in writing.
Right.
That's first and foremost. What I would never tell somebody just to take my word for it. Okay, right. Because remember, I'm not in the servicing department. So, and I don't work at everyone else's institution that has their own guidelines and their own structure way of doing things. So that's first and foremost. Don't look at everything that's online. Don't, just see the headlines and think you understand it. Call your servicer and get the real information. That's the only way you're going to really know your options. The second thing is get it in writing. And then the third thing is, let's talk about your, this refinance. That's actually a great option. Instead of just forbearing 2 payments, you can skip 2 payments. And then you jump right back in where you were on the third payment, potentially at a much lower monthly payment. If you're in the 5s and you're going to the 3s, yes, if you go to a new 30, your payment should remain lower. If you go to a 15, depending on how long you've been in the house, depending on the interest rate that you're getting, it could end up coming out roughly about the same, your monthly payment, or potentially less, or potentially more, depending on, again, how much is left on the loan amount and how long you've been in the house. So just run the different scenarios. I have a client right now. Just yesterday, I put a deal in, and they're both are working. There no issues on paying it right now. They called their servicer to make sure that they know all their options, and we talked about doing the refinance about a month and a half ago before the COVID-19 issues started to arise. And now he's calling me back up to put the deal together because he really liked the option of skipping 2 months. That's almost about the same thing, and not having to go through the whole paperwork of hardship with his current servicer. Plus, he's going to get his refund check back from his escrow account. Mm-hmm. So he's going to save. He has like a $3,500 a month payment and approximately $3,000 in escrow. So if you skip 2 monthly payments, then he gets his $3,000 escrow check back. He's approximately at like $10,000 all in of that breathing room until his payment is due in the third month with the new payment amount. So great option for him, and luckily he qualifies. Luckily they qualify together. So that's a really good option. Not everybody has that option because they may or may not be working right now. But if you do have that option, you might want to consider that versus going into forbearance.
How much money do you need, Chris, to do a refi? How much reserves?
On a rate and term, on a primary, potentially we won't even look at what's in the bank. If you have multiple, properties, rental properties and such like that, you'll need to show reserves.
All right, somebody just messaged me. And the message reads, this is actually going. And I can see why they didn't want to go on and post this. File bankruptcy, doesn't report on my credit bureau anymore. I am paying my mortgage payment. How do you refinance a property that doesn't show up on your credit report? Mortgage.
Is it their primary?
Mm-hmm.
Yeah, I mean, they're still making the payments, so there's got to be a mortgage statement. Maybe it's not on their credit, but they're still making the payments.
Yeah, see,
I would imagine.
I'm going to explain to you why I'm doing these things at 12 o'clock, guys. I'm doing these things every single day at 12 o'clock for as long as we are in quarantine, crisis mode, whatever it is. If it turns out that I continuously keep doing it, great. If not, this isn't a ploy. This is to help people. This is to help individuals. Chris, somebody just messaged me and said, I'm going to reach out to Chris after the broadcast, and I'm going to talk to him about refinancing my properties. Do you understand the power of why I'm doing this? This is the time to give back. This is to offer solutions where, and I hate to quote, Donald Trump, but this isn't fake news. This is really what's going on. The government, in my opinion, and this is only my opinion, this is not my guest's opinion, this is my opinion, is only telling you what you need to know. In 2008, when the shit hit the fan, and it did, and it hit the fan because of the government owned up to it. And they helped. And they bailed out people. And they bailed out a lot of people they probably should not have bailed out at all. This time, guys, this is not a government crisis. This is a pandemic. This is COVID-19. This is a virus. So I want people to understand they're banking on the government to swing around and bail people out. And I could tell you, based on my conversations with people on the inside of some of these banks and higher ups, people are going to be in for a rude awakening. So if you think the forbearance is going to lead to something where maybe they're going to give you forgiveness, maybe they're going to put the difference of what you owe on your mortgage payment to the back of your mortgage. That is a deferment. Is it a guarantee? No, it is not. So if you're in a situation where you can't pay your mortgage, and again, this is not Chris's thinking, this is only my thinking. He can agree or disagree at the end of what I'm saying right now. If you don't pay your mortgage and you've done a modification before, you are going to run the risk of putting yourself into a foreclosure situation. Let me back up. If you before had one or two modifications with the servicer and think because the lender or the servicer had changed hands, that you might not be at risk. I am here to tell you, don't play that game. That is a dangerous game. You are playing, what is it, Russian roulette with your revolver? Bullet, no bullet, whatever. Be very careful. Be very careful when you're speaking with your bank. Chris had a really, I know Chris is going to agree with me on. Chris had a very good point, and I say it every single time I'm on these things. Call your bank. Communicate with your bank. But I'm going to add one thing. Ask them to record the call. Some of the banks are saying if you prefer to not have the call recorded, press 2. If you agree with us having this call recorded for quality control and training purposes, hit 1. You want to record the call. Not because you're going to mess up, but because you're going to ask these people questions. And the questions are going to be, do I qualify for a forbearance? Do I qualify for a deferment? Do I qualify for a refinance? You ask whatever you want, but at the end of the day, get it in writing. If they're not willing to give it to you in writing, you want to find out other options as far as refinance. Chris's email is at the bottom of this thing. I'm going to leave this up until the end. I'm going to leave it up for another 8 minutes. Write his email down. You can reach out to Chris. That is his name. You can reach out to him on Facebook, on private messenger. So, Chris, I would watch out for your messenger today and see who reaches out to you. His name is Christopher Allessio, and you can reach out to him directly, and he can give you information, point you in the right direction. Chris, right now, is it really about making money? Is it really about, being a superhero and saying, oh, I'm the best in the industry, I'm amazing? I asked you. You didn't provide it. I asked you who is coming to you and asking you for advice. You offered it because I asked. You didn't say it because that's the type of person you are. Guys, these are the type of people that I'm bringing on. This is the value of what we're bringing. So I'm going to stop rambling. And Chris, we've got a couple minutes here. Somebody asked a question. Let me see what it is. You have anything to ask what I just said, Chris?
No, I mean, I think you hit the nail on the head. First of all, it's never been about the money. It's always been about helping people out. That's why I do what I do. I mean, there's about getting financial free, becoming financially free through one method, which is real estate. But knowing your options, these decisions that people make, whether it's a refinance, whether it's the type of term that you go into, these can be game changers for a person, an individual, or their family. So just, when you are working with a lender, make sure that lender is reputable, make sure their lending institution is stable and can back up what the products that they're offering, and then make sure that you're asking the right questions. You can go to pretty much anybody and get a loan. Maybe not right now, but in any good time you can go to anybody and get a loan. But what else does that lender offer you? What is that loan officer's relationship and insight into the market and the bigger picture of things? What can they offer to you so you can think outside the box?
Okay, so again, I don't know who it was, but somebody asked about the guidelines for the residential refi, and I know we covered it a little bit, so they might have tuned in a little bit later. Can you touch on the guidelines, residential refi?
I mean, no, they're pretty straightforward. I mean, we're going to do a credit check. We're going to, see what your debt to income ratio is. We're going to look at all your documents, where there's a full documentation loan. Other than that, it's pretty much straightforward. I mean, the guidelines for a primary residential refi have not changed drastically. Yes, they've tightened up a little bit, but they're, if it's your primary, you should definitely just get an application and give me a ring. We'll take a full look at the file and to see if there's any challenges.
Guys, we've got 4 minutes left. My guest today obviously has shed some light on the guidelines, what has changed, what hasn't. I probably didn't touch on all the questions that people would wanted. Chris's email is on the bottom here on the ticker. I'm going to leave it up to the end. Again, this is about, offering education, letting people know what their options are, letting them finding their options. Chris, what would you say to somebody right now if they had a question that they could ask? What question do you think that they should be asking that they're not?
I think that they should just be asking what the next 90 days, next 6 months look like in their home life and what they think. If they think they're not going to be able to make payments, I think they should call their servicer and find out what their options are. I think if they have a job and they still potentially might not be able to make payments, they should maybe consider doing a refinance. I think just reach out to the experts in the industry, reach out to you. You've been doing this a long time. I know you've always said it's people before profit. So that's your tagline, and you live by it. So I think that, if people have questions, they should be reaching out to you and to your team and to figure out what their options are, and, worst case scenario, best case scenario, but don't just stick your head in the sand and, hope for the best.
Yeah. I think the point that I wanted to make today, at least my point was, is that people should understand this is not, although it could be a catastrophe, like 2008. My whole thing was I thought that the government should have done a hard reset for 2 to 3 months, and basically said to everybody, look, guys, we're not going to bail you out. We're going to ask you to tack payments on, and give them some type of tax relief, these big corporations. So let's say if a mortgage payment due, you don't make your mortgage payments for, let's say, 30 years. So now it's 30 years and 2 months. Credit doesn't get impacted. You don't get, related or referred to foreclosure proceedings. And then, but it's never going to happen. It's a pipe dream. I've said it before. People reach out to me and say it was a great idea. How do you, offer it to the government? The government's they're not going to listen to me. I live in Mahwah, New Jersey. I'm just a guy who's got a wealth litigation company. But I would say going forward, if you have questions, concerns, please feel free to reach out to Chris. Chris will definitely answer your questions regarding servicers or the actual lender of your loan. And do not put your head in the sand during these times. Find out what your options are. Chris, loved having you on. I apologize for messing up your name in the beginning. Murdering it.
Maybe you were just doing it to see if I was paying attention.
No, I should have played it off, but I didn't. Last night, this morning, I didn't go to sleep till like 4:00 this morning. We actually switched softwares for our company, so we're running with a more beefier software based on what's going on. We were going to switch over anyway because we knew that there was going to be a correction, but things are happening way too fast for us, and we're putting in a lot more time and hours than probably should be. But we have to do what we have to do. We have to make things right. It's important to make things, what am I trying to say? We're trying to offer advice for people. We're trying to make it so it's easy for them to find information. Me personally, I don't think the government's doing a great job. I think that they're just going out there that, we have the forbearance nonsense. And to me, that's all it is, forbearance nonsense. I mean, when somebody sends me this and tells me, hey, I'm getting a deferment, that's not a deferment. That's a forbearance right there. That's a balloon payment. That's something's going to come due. And if you can't make April, how the hell are you going to make June? That's just my personal opinion. Any parting thoughts, Chris?
No, I think we pretty much touched on everything. I think if anybody has questions, they know how to reach me. My email's below. I'd be happy to help anybody out, even run through different scenarios, what your potential options might be. If I don't have all the answers, I'll get the answers, or I'll point you in the right direction.
Awesome, guys. Christopher, we appreciate you having you on today. The information that you gave was top notch. His information is on the bottom. He's with Freedom Mortgage. Thank you so much for everybody tuning in today. Remember, it's not a no until you get a restraining order. Guys, at the end of every video I do, I ask my guests to do the finger point. So, Chris, let's have it. Nice. I like it. All right, Chris, stay on for a sec. All right, guys, we'll see you tomorrow. Our guest is going to be Lenny Hernandez from Flippin' NJ.